Adjunct Professor Moran, Microeconomics 112. In this session, we're going to use explicit and implicit costs to determine who's using society's resources to their best economic purpose. In other words, who's making an economic profit and who's making an economic loss. If you're making an economic loss, then you should go back into the prior type of work you were doing because you're making less money at a new activity than you were at an old. But if you're making an economic profit, it means that you're making more money at this new activity than the alternate uses you had been using your personally owned resources for before. Accounting costs are payment for using other people's resources, like buying something for your company. Economic costs, also known as implicit costs, are opportunity costs. They're foregone once you stop using them for your own purposes at some business and instead use them to do an alternate business activity. Our first step is to classify expenses either into explicit or implicit costs. Explicit are known as accounting costs, implicit are known as economic costs. So let's say in both scenarios someone's making $100,000 and each person has the identical accounting costs. They actually are cutting checks to buy things from other companies to use in their factories. So the cost of shirts is $20,000. They pay their workers $10,000, and they have a utility bill of $5,000 each. Okay, that's 30. So they have explicit costs of $35,000 each. Their accounting profit would be $65,000. Now, in order to go into this line of work, this person had to give up interest on money they had in the bank but now have invested in this business. So that's foregone. They've taken it out. They're no longer earning the $10,000 of interest. This person gave up renting out the building that this person is now using to run their business. So they rented it out to somebody else. Can't do that now because they're using it for their own business. So they gave up $20,000 in rent. This person used to work at a job that paid $30,000, but now this person gave up that income in order to run their business. Foregone wages in implicit or economic cost. There's a certain amount of aggravation that goes into being an entrepreneur, a boss, as opposed to being an employee. And that extra amount that has to induce someone away from their previous job into a new line of work is called a normal profit. Let's say of $10,000. So this person's foregone compensation, $60,000, $70,000. So this person has an economic loss of $5,000. Accountants prefer to write negative numbers in parentheses so you don't mistake it, say, for a dash. So this person has an economic loss of $5,000. This person should stop doing this line of work, go back and collect the $10,000 of interest, rent out the unit for $20,000, collect wages of $30,000, and not be bothered with the aggravation. This is not putting society's resources to best use. This person, however, has different costs. This person has a $10,000 interest not being earned because they withdrew their money from the bank, $20,000 in rent that they're no longer renting out their unit. They're using it themselves for their business. They've given up a job for $20,000, so this person didn't make as much in an alternate line of work as this person. And the normal profit of $10,000. So this person's economic costs, implicit costs, are $60,000. This person has an economic profit of $5,000, so it makes sense for this person to do this work because they're making more doing this job than they were using their resources, their own personal resources, for something else. Whereas this person is not using his resources to the best use. This person should be give up this line of work and go back doing this. So in this handout, we determined each person's accounting explicit costs. We determined each person's accounting profit or loss, each person's implicit or economic costs, and accounting profit and loss. We decided that this person should go back doing what they used to do, and this person should remain doing this other type of business.